In today's episode, I'll talk about two interesting stories. In the first story, I'll talk about the recent sanctions that US has imposed on Russia and what they mean really for the markets and for people like you and me as investors and for people who track the markets. And in the second story of the day, I'll talk about what exactly is happening with Argentina in terms of their economy and their currency. Welcome to the Daily Brief Show by Zerodha, where our aim is to cut through the noise and simplify the biggest news and stories in the financial markets in a way that is easy to understand, yet one level deeper as compared to traditional news channels. I'm your host Anurag Bansal, and today is Thursday, the 16th of January. But before we begin today's episode, a very quick announcement. We've recently started to summarize whatever happened during the market hours in something that we call as the aftermarket report. If you are interested in reading more about it, do check it out from the link in the description below. And with that, let's begin with the first story. When Russia invaded Ukraine back in February 2022, it triggered one of the most significant geopolitical shifts in recent history. The world, which was led by the US and the European Union, realized that confronting a nuclear-armed superpower directly could have catastrophic consequences. So instead, their response took the form of economic warfare, with sanctions becoming the weapon of their choice. Now, sanctions, for your reference, are essentially like penalties which are imposed by countries or groups in order to restrict a target nation's ability to operate economically or politically. Now, the idea here is very simple. If you cannot engage in open combat, especially with a nuclear power like Russia, you hit the lifelines that essentially fund your adversary's actions, which is the economy. Now, in Russia's case specifically, the West targeted its oil and gas sector, which is a very critical pillar of its entire economy and accounts for roughly 15 to 20% of its GDP, and a major funding of its war effort comes from there itself. Now, the first wave of sanctions was imposed back in 2022, and it was quite sweeping, to be honest. See, Europe, which was once Russia's largest energy consumer, decided to drastically cut its dependence on Russian oil and gas. Now, at the start of the war, Europe accounted for over 50% of Russia's energy exports. But by the end of 2022, European purchases of Russian oil had plummeted quite a bit. Now, this left Moscow scrambling to find new buyers, and it did not take long for India and China to essentially step in. Now, Russia, which at that time was very desperate to keep its oil flowing, offered massive discounts, which was essentially a lifeline for both the nations, which were already struggling with surging global oil prices. Now, the G7 also implemented a price cap of $60 per barrel on Russian crude oil. Now, this enforcement mechanism was quite innovative. Any tanker that was carrying Russian crude priced above this limit could not be insured or financed by Western companies. Now, the thing is, since Western firms dominate more than 90% of the marine insurance market, shipping Russian oil above the cap became riskier and much more expensive. So, in order to bypass these restrictions, Russia turned to a shadow fleet of older and poorly regulated tankers. Some of them were over 20 years old and were often uninsured. Now, this particular fleet became a very important player in transporting discounted Russian oil to India and to China, and it enabled Russia to maintain its export volumes despite all of these Western sanctions. But these discounts, of course, came at a big cost. Russia's revenues from oil exports started to shrink as it sold crude oil at $20 to $30 below Brent crude prices. And to give you some context, before the year 2022, Russian crude made up virtually none of India's imports. But by 2024, it started to account for 40 to 45%, and it also helped India manage its 180 to 200 billion US dollar annual energy bill. Meanwhile, China, which is the world's largest energy consumer, was purchasing nearly 47% of Russia's total crude exports. So these steep discounts made Russian oil not only attractive but actually essential for both of these nations. Now, fast forward to 2024, the US has now imposed its toughest sanctions yet. Now, these measures are targeting two major Russian oil companies and 183 vessels out of more than 600 from Russia's shadow fleet, which tightens the loopholes which allowed Russian oil to flow freely to India and to China. Now, with fewer tankers available and higher risks involved in shipping, transporting Russian oil has become a lot more challenging. Basically, the US is aiming to erode Russia's oil revenues even further, which have already been under a lot of pressure. Now, fossil fuel exports earnings have dropped by 5% year on year in the year 2024. While crude oil revenues rose by about 6% due to higher global prices, export volumes fell by about 2%. Now, these new sanctions are expected to reduce Russia's oil revenues by another 20 to 25%. Now, for India and China, these sanctions are already causing some ripple effects. Indian refiners, which earlier relied heavily on spot purchases of discounted Russian crude, are now getting forced to pivot to Middle Eastern suppliers. Yogesh Patil, who is an energy expert, highlighted this point in an interview with Economic Times, and he noted that Indian OMCs will struggle because they cannot really pass on higher crude prices to consumers because of frozen domestic fuel prices. In China, on the other hand, refiners are also shifting to other sources like Africa and the Middle East. And this has increased the demand for alternative crude grades, and it is driving up spot prices, which is adding to the strain of global oil prices. Now, Brent crude, for your reference, has already climbed above 81 US dollars per barrel, which reflects all of these disruptions. With that, let's move on to the next story of the day and talk about a big piece of news from Argentina, which is a South American country which was once among the richest in the world. But ever since then, they have struggled with economic problems for many decades altogether. Now, the recent twist in Argentina's story is the election of their new president, whose tough and untraditional approach to governance has often become a topic of global debate. And to understand what's exactly happening and why people are talking about it, we first need to step back in time a little bit. See, in the early 1900s, Argentina was doing extraordinarily well, and this was largely due to its rich farmland and very strong exports of beef as well as wheat. Now, back then, it was ranked among the world's wealthiest nations. Its capital city, Buenos Aires, was so glamorous and modern that people even often referred to it as the Paris of South America. But the problem for them started with the Great Depression in 1929. Global demand for Argentina's farm products all of a sudden dropped, and this caused a sharp downturn in the economy. Now, Argentina at that time had become so dependent on foreign trade that when their exports fell, they had only a very few ways to keep their money flowing in. And over time, their country also went through multiple military coups and very frequent changes in the government. Every new leader tried a very different set of economic policies, from nationalizing industries to privatizing them, and then sometimes reversing those decisions altogether. Now, this particular inconsistency made foreign investors very nervous, and they gradually started pulling their money out of Argentina. Meanwhile, on the other hand, many governments were trying to please the public by spending a lot of money on welfare, subsidies, and public sector jobs. Now, in order to fund this, they started to print more currency, which eventually led to soaring inflation. Price of basic goods rose very quickly, and sometimes they were even changing every day. And as a result of all of that, the Argentine peso lost a lot of its value. Now, eventually, two very different exchange rates started to emerge. One was set by the government, and another, less official rate, which reflected what was really happening in the market. Now, by the time the current president ran for his presidentship in 2023, Argentina's economy was in dire shape. Inflation was extremely high, about half the country's population was living in poverty, and Argentina owed a lot of money to international lenders. Now, surprisingly, the current president won by telling people that Argentina was in too deep a mess to keep using the same old policies. He said that Argentina had to hit the reset button essentially by cutting public spending, removing subsidies, laying off public workers, and possibly even replacing the peso with the US dollar, which is, by the way, a process called dollarization. Now, it may seem a little strange that so many people ended up supporting this radical plan. But in their defense, most Argentines felt that every other approach had already failed, so they were essentially desperate for any change that might stop this cycle of inflation and debt. Now, of course, only 1 year has passed since the current president has taken office, so it is definitely very soon to say if his policies will actually succeed in the long run. But still, there are some very clear results that all of us can look at. On one hand, inflation has slowed down noticeably. In December 2024, monthly price increases fell sharply compared to December 2023, which suggests that cutting government spending and freezing public salaries has definitely helped in cooling down inflation. Now, Argentina's primary budget, which is basically what the government is left with after they pay most expenses but not interest on debts, has even moved into surplus for the first time in many years. But on the other hand, life has actually become much more harder for many ordinary Argentines. See, since energy and transport subsidies were eliminated, people are paying far more for basic needs altogether. Some households have seen costs go up by several hundred percentage points. Now, the percentage of people living below the poverty line has also grown, and consumer spending has dropped because people just cannot afford beyond their essentials. Construction activities have gone down as well because developers and businesses are now waiting to see if the economic climate will even stabilize or not. And as a result of all of this, some economic and political thinkers are worrying about these extreme tactics. An author called Naomi Klein has also written about how crisis can be often used to force through controversial changes which can harm many people in the process. Some are fearing that the current president's policies could widen the gap between Argentina's wealthy elite and the rest of the population. Now, whether all of these policies will lift Argentina out of the long cycle of financial turmoil is still very unclear to people like you and me. Now, supporters are saying that these measures are a necessary point in the economy which has already been in a downward side for many years. But critics, on the other hand, are pointing to increased suffering and also societal unrest which they believe will continue to follow. Now, what remains undeniable though is that Argentina has a very complex and tragic history of economic ups and downs, and the current president's radical approach is the latest chapter in all of this. Of course, everyone is currently watching to see if this particular gamble will bring Argentina back into prosperity or it'll sink it further into complete chaos. With that, let's move on to the final section of the day and talk about the quick news tidbits. First, Hyundai and Kia are under pressure to reduce their rising emissions, largely caused by the heavy focus on SUVs and their slow pace in adopting EVs. Although both companies are planning to produce EVs locally, high costs and limited charging infrastructure could make it difficult for them to meet India's environmental goals. Second, Tata Electronics has become an important part of Apple's manufacturing process. In 2024, it handled 26% of the total iPhone production and earned about 40,000 crore rupees. Now, this success comes on the back of a 180% surge in production, which makes Tata Electronics a key player in Apple's India strategy. Third, Vedanta Limited is planning to divide itself into 5 separate businesses. The company is hoping that this particular move will help it manage the parent company's debt a little more effectively and will also increase every single unit's market valuation. Fourth, India's trade deficit increased to 21.94 billion US dollars in December 2024 as compared to 18.76 billion US dollars in previous December. Now, this wider deficit signals growing pressure on India's external trade balance. That's all the news and stories I have for you today. I hope you enjoyed this episode and maybe learned something new from it. As usual, this is your host Anurag Bansal signing off. I'll see you in the next episode. Take care and goodbye. Disclaimer: this content is for informational purposes only. None of the stocks, brands, or products mentioned are recommendations or endorsements.